Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Historically, December, it has been considered to be one of the most action-packed and profitable months of the year for commodities trading. This December is certainly shaping up to be no different and living up to expectations. Developments around the new Omicron coronavirus strain, that will continue to drive the markets again as we head into next week, as traders await more news about the new COVID-19 strain, which the World Health Organization has labeled as a variant of concern. Now, last week, Federal Reserve Chair Jerome Powell, he signaled that the new variant that could slow down global economic recovery and also prolong supply chain disruptions that are fueling unstoppable inflation. Jerome Powell's comments, they were also echoed by some of the world's top economists, warning that the new variant that could shake up the markets, exacerbate supply chain woes, amplify record high inflation, and possibly result in the 1970s style stagflation. Another high impact event that traders will not want to miss out on is Friday's consumer price index data. That is expected to show that inflation has rocketed higher in November, with consumer prices posting their biggest annual jump in 3 decades. Currently, the price action across a number of commodities, including the metals and oil, that is beginning to resemble the identical trend seen during the first wave of the pandemic in April of 2020. And we know what happened next. Gold, palladium, platinum, copper prices, they surged with slingshot moves to all-time highs, whilst oil prices, they rallied over 350% within the space of a year. Right now, a long list of commodity prices, they are back at the sweet spot, which ultimately presents the scope for huge upside potential ahead. Even though we've seen a total of 27 commodities, ranging from the metals to the energies to the soft commodities, tallying up double to triple digit gains in 2021, this is just the beginning. JP Morgan, they expect prices to overshoot $125 a barrel next year and then soar to $150 a barrel. Elsewhere, the Bank of America, they have described commodities as their preferred asset class over the next decade, whilst Goldman Sachs, they've already begun preparing their clients for what they predict will be one of the most profitable months and years ahead we've ever seen. Whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just earn a better return on your savings, then now is the time to take action. Right now, you have an opportunity to finish this year on a high note, but also set yourself up to hit the ground running in 2022, which based on our research we predict is going to be a record-setting year due to all of the macroeconomic events that are currently unfolding. Extraordinary times, they do create extraordinary opportunities. Right now we're living in one of the most exciting and rewarding periods ever in monetary history. So if you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, you still have time to make 2021 your best year yet and set yourself up for 2022. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So first of all, palladium prices here. So they're up just under 2% into Friday's close. As you mentioned, once you move into a new month here, this is where you can see the cycles start to change and shift into a different gear. We've been talking you through this sell-off throughout the month of November with all of our commodity reports over this month, warning you of the correction that you get into Thanksgiving, into Black Friday, into contract settlement and end of month profit taking. Very consistent, the downward pressure that you get throughout November, especially the rug pull around Black Friday. That's played out with absolute precision on gold, silver, palladium, platinum, and also copper as well. Palladium now at much more favorable levels. You have to have a look at palladium here. It's now corrected over 5,000 points in the last 2 weeks. As you know, we were banking profits at the top here at the 2,200 level for 4,000 points over 2 trades. So of course, for every 1 lot contract that you'll be trading, that's $40,000 of profit. For every 10 lot contract that you'll be trading, that's $400,000 of profit. So palladium here, absolutely keep this on the radar as we go into next week. In fact, last week, palladium prices, they dropped lower than gold prices. And you have to bear in mind that palladium broke out above $3,000 per ounce back in May, hitting all-time highs. And it's now corrected even lower than gold prices, which are currently trading at $1,783 US per ounce. Absolute classic here on gold. gold as well. So many traders, they started to get ultra bearish here as we went into the non-farm payroll data on Friday. But as we talked you through on gold and silver asset of the day, once you transition into a new month, as you go into December, there are very different cycles in this market for you to take advantage of. And now what's happened is lots of traders have been caught capitulating too low. They're getting caught in a bear trap. And now we're seeing the reversal that we talked you through. So first of all, expect the rug pull, right, in the middle of November, which is exactly what we saw. We warned you of this throughout our commodity reports and also gold and silver asset of the day. When the price was above 1,860 US dollars per ounce, we told you that gold would be trading back below 1,800. We saw exactly that. Within a week, we had a massive rug pull on gold here, taking the price all the way back down, sub 1,800. This was at a point where many traders out there were getting ultra bullish on gold once it broke above 1,860, but absolute classic move here. As you get time and time again throughout the month of November, we have seen that usual correction, pressure to the downside, much more favorable prices now. But what's happening in the market now is essentially many traders, they're now starting to capitulate and sell short at the low of the move here, just as we're getting the bounce and reversal to the upside. So it's classic really what we're seeing in this market. Same for silver again. Talked you through this on silver asset of the day on Thursday last week, that expect fresh capital to come in into a new month once you transition into December. We've seen exactly that. Friday you've got a reversal, just under 1% move to the upside. We've now had over a 7% correction to the downside over the month of November. Everything we talked you through, just go back and watch silver asset of the day from earlier on this month, where we talked you through the usual corrections that you get over the month of November, the rug pulls that you get around Thanksgiving, Black Friday, contract settlement, end of month profit taking. All of that has played out, right? But now we're starting to get that support come in. We've corrected all the way down to 22 US dollars per ounce. Now we're at a reasonable zone here to start looking for support at these levels as we go into next week and as we progress throughout the month of December here. So absolutely keep an eye on palladium going into next week. Keep an eye on gold at these levels, and silver of course as well. Now platinum is another one. Now of course we warned you about platinum previously. We banked over 1,150 points on this trade in the middle of November before we had the huge correction lower. You can actually see from the highs to the lows, platinum has broken down over 2,000 points. It's retesting the swing lows from the middle of September. This zone down to the 900 zone, I would absolutely keep on the radar as well as we go into next week. Alongside platinum, you want to be keeping an eye on oil between 60 to 65 US dollars per barrel. Oil capitulated to the upside on Thursday after the OPEC meeting. We saw a 4% breakout to the upside, pullback after Friday's non-farm payroll, but you can see we're just in a chop zone right now where soon this will resolve itself and then can provide some huge opportunities for a slingshot move. Absolutely keep an eye on oil, again between 60 to 65 US dollars per barrel. This can offer some huge opportunities towards the end of the year and going into Q1 of 2022. As you know, commodities, they don't move up in a straight line, they zigzag, and that really presents traders with massive opportunities to capitalize on that short-term macro-driven volatility. If you do want to really maximize your money-making potential and thrive, not just survive in these fast-moving markets, that's where you need to adopt your strategy to the current market conditions, and most importantly, utilize a professional research-driven approach. In these times of heightened volatility and rapidly surging inflation, the importance of having an essential income-generating skill like trading has become a must-have necessity. If the pandemic has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option, it's a priority to make yourself inflation-proof and thrive in this highly lucrative climate, not just survive. If you want to gain the ultimate edge to really supercharge your wealth in these fast-moving markets, then you need to make sure that you're trading like the hedge funds, the money managers, the institutions, utilizing a professional research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there using outdated technical analysis and gimmicky technical indicators will not work, and you're guaranteed to get crushed and chopped up in these markets. You want to be utilizing data, statistics, market intelligence, understanding of the intermarket correlations, the ratios in the market, capital flows, sentiment, macroeconomics alongside the fundamentals, the key news items and events which will create huge opportunities to capitalize fast on impulse moves with commodities where you can profit extremely quickly from the gains, and alongside that understand and learn the daily, the weekly, the monthly, the quarterly cycles for each commodity, and of course how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.